Hello, everyone. Welcome. My name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. We are a lender that offers all kinds of different alternative programs. And so today, I'd like to take the opportunity to go through a few different scenarios and just kind of talk about what makes us different. So we've built this pricer just to go through for our team, to go through different pricing and scenarios so that we can basically offer different quotes for our clients. So this is just a quick quoter. Again, if you want to get a full loan estimate, please get with one of our licensed loan officers. But for example purposes, we're just going to do a simple 80 LTV conforming conventional purchase for 30-year fix for primary occupancy. And we'll use a default of Florida, Miami-Dade, which is where we're based, a default of 760 FICO, estimated debt to income ratio of 40. And we will go ahead and just check out the markets today, as all of our partners and banks have issued new rates this morning. So let's see what our par rates are, or our no cost rates. Oh, we got a security check here. I think that should be it. Uh-oh. Don't think I passed security. Let me try that again. Everything else should stay the same. And there we go. Sorry, I failed security earlier. So we can see here some of our Fannie Mae and Freddie Mac programs. These home ready programs are specific for special programs for first-time borrowers that do qualify typically, or borrowers under area median income. So these are special programs. Let's scroll down to our regular programs from our partners and banks. So it looks like the first standard conforming 30-year fix, looks like our par rate or no cost rate is right now today about 6.625. Hopefully tomorrow it gets lower as the markets stabilize a little bit. The rates have been going down, but that's the approximate price right now for a primary purchase at 80 LTV. So let's go through a few different options here on our quick pricer just to compare the different programs and options. So for those borrowers that maybe, let's slide this to the same, maybe don't quite qualify for conventional and would like to try an FHA, which has more relaxed income qualification standards where we can have a higher debt to income ratio. But we'll go ahead and compare the pricing here on a standard scenario for this type of loan. And it will be a very easy comparison. Oops. That's over the loan limit. We just got to lower this a little bit here. FHA does have a loan limit, so we'll have to make sure that we don't quite exceed that, which they'll be raising shortly for the new year. And here we go. So for an FHA 30-year fix, our par rate or no cost rate is between 6 and 6.125. So the 6% rate today will have a slight cost, but a 6.125 will be our par rate or no cost rate with some of our banking partners here that have these programs available. So these are great options for our borrowers that don't quite qualify for conforming or maybe want to do a multi-unit property for their first purchase. That's a very common reason to go for FHA financing, still be eligible for low down payments. Remember the APR here on FHA is a little higher because there are extra fees involved with the FHA programs for those loans. So you do want to make sure you compare the rate with the APR on all your different quotes. Now let's compare some of the other government programs we have available for primary purchase. Again, let's slide this up to 80 LTV. We'll do a purchase, but we'll try the VA programs for those qualified veterans that qualify for the VA program. It's a great program. Obviously, a lot of great benefits for our vets there. But we'll keep everything else the same estimated FICO, same estimated debt to income, and see what the average rates here are for our partners on a VA. So our top option here for a no-cost VA, we have a 0 discount point option for 6% rate. Remember, there are a little bit of fees with VA, a funding fee, so there are some APR considerations as well. So make sure you check that out and get with your licensed loan officer to explain all the different ins and outs of these different programs. But VA is great today as well. Let's go back to our quick pricer and go through the last government program. We'll pull it up to 80 LTV. And in this case, we will go to a USDA program. Remember, USDA is a government program that's only eligible for rural properties, so they have to be in a certain area. There are loan limits, so let's make sure we lower this a little bit. And it's still going to be primary. We're still going to put Miami-Dade, even there's not many Miami-Dade USDA qualified properties, but the pricing will be relatively the same here. So same estimates here. Let's go ahead and check out our USDA programs this morning. And for our par no cost rate here, our USDA program is at 6.125, right around the same as FHA and VA. And again, there are some fees involved with USDA, so there's a little bit of APR considerations there. Again, please get with your licensed loan officer from our team so they can go through all those different details with you if you want to check some of these out. Now we've gone through the standard programs. What really gets us excited here on our team and what we specialize in is alternative documentation. So in order to compare some pricing for our non-QM programs is under what we call expanded guidelines. So if a borrower doesn't quite fit with the conforming or FHA, VA, FHA guidelines, we still have hundreds, maybe even thousands of options across all of our different banks and partners that offer alternative income documentation. So this will be our first experiment here with showing the pricing for expanded guidelines today. Everything else will stay the same. It'll be a purchase, 30-year fixed, 80 LTV, primary occupancy. But in this case, we're going to determine our debt to income ratio rather than using regular tax returns and everything that is required for FHA or VA or USDA or, of course, conventional. We will use our most popular option here for example purposes, which would be a 12-month bank statement loan. So that's one of the most popular options for our self-employed borrowers. So these would be for realtors, loan officers, a lot of people in our industry, or just a lot of people in the new economy, gig economy, Uber drivers, all kinds of different people that can use this alternative documentation to prove their self-employment income rather than tax returns. So in this case, we'll be doing everything else set the same, but we'll use our 12-month bank statements to determine our debt to income ratio, and we'll be able to still qualify this borrower who may not otherwise qualify. And sorry, I have a security check here. Oh, doing too many quotes. All right. Did we pass? Yes, we did. Okay, great. So these programs vary greatly between banks and investors that we work with that have different options. So make sure, again, you get with one of our licensed loan officers to go through all the options. So for example, right here is the best rate this partner is offering, but there is a large cost, so I probably would not recommend this. Our relatively no cost option here, in this case for one of our expanded options, is around 8.125 for a slight cost there. Now we can scroll down. There's all kinds of different investors that we have that offer different options. Right here is at 8.75, and they even go up into the 10s. Remember, these are alternative documentation programs that have very specific guidelines. So please get with one of our licensed loan officers that can find which one of our partners will fit your position best. So these are great options for our borrowers who do not qualify conventional FHA, VA, or USDA. We can now use these alternative income programs. Before we move on to investments, I'm going to quickly pull up another popular option for our expanded guidelines, which would be our asset related. So typically people that have a large asset account, for example, a large retirement account, but they may be not employed at the moment, maybe they're between jobs, or maybe just don't have regular employment, we can still determine a debt to income ratio based on them accessing a large account in order to have to liquidate that account to pay the mortgage. So this is a great option for our borrowers who aren't necessarily self-employed, maybe just between jobs, but they have a large asset account built up and they still want to qualify for a loan. So without even necessarily to be active on the employment, you can use your assets for that. So in this case, doing too many quotes. Let me get through this real quick. I think we're good. And again, we have our different options from 8.375 with a slight cost up to 8.5 and above and beyond into around the 10% range for these non-QM programs that still allow our borrowers to still get into a home without necessarily having to document their employment at the very moment. They can use their assets to qualify. Now, we can move on to what really gets us excited here is investment properties. So we work with a lot of investors, a lot of people buying their first investment property or their 100th investment property. But we have a plethora of programs with the non-QM options for investments. And real quick, we will compare those to the conforming options. Remember, we have conforming, FHA, VA, and USDA do not qualify for investment properties. So we're going to quickly compare a conforming investment property purchase with all of our other alternative options. So on a conforming loan, there is no prepay. That's obviously for our other options, but we'll keep everything else the same. It's going to be a single family home, Miami-Dade, 760 FICO, and we'll determine, estimate a 40 DTI for this conforming loan in order to get pricing. So let's go ahead and see what the pricing is today. I think that's it. See what the pricing is today for our conventional investments. So obviously, this is going to be much higher than primary. So the same Fannie Mae conforming loans that we saw a minute ago are going to be a much higher rate for obviously a much higher cost as well. There are price adjustments from Fannie Mae and Freddie Mac here for any investment property. So we see that reflected in a higher cost here in these cases. Still great options if you qualify for a conventional loan. If you maybe don't qualify for a conventional loan, there are other options. So let's pull those up real quick and compare them. So we have a couple popular options under expanded for people purchasing investments. Obviously, we just talked about before the bank statement option for those that are self-employed. And typically with a non-QM investment, we're going to add a prepayment penalty. So we'll add 3 years here. That will give us our best pricing for these non-QM programs to compare. So obviously a prepayment penalty, a big discussion with your loan officer, but it does give us great options if you don't quite qualify for conforming and you'd still like to purchase an investment property. So let's see what our bank statement investments, 80 LTV options are looking like. So again, this is alternative documentation and it's investment, so a little bit higher than what we saw before for primary bank statements, but still a great option for no discount points. We have a 9.25 rate for our bank statement used for an investment property purchase. And obviously there's even higher rates and other programs from our different banks and investors. So dozens of programs here for those options, and obviously get with your loan officer to find the best one that fits for you. The other options we love to use for investments expanded are the DSCR. So this is what we love to talk about. This is what our team specializes in. We love to work with investors that love to purchase investment properties. And with the DSCR, we can actually use the property rent income to determine debt to income ratio. So we actually do not need to have any personal income involved, no income, no employment documentation, and investors can still purchase investment properties at great non-QM rates here and not have to prove any personal income. So these are our most popular programs here at the Mortgage Calculator. So if you're interested in purchasing an investment property or short-term rental, Airbnb, these are great options. So in this case, obviously get with the loan officer to determine your DSCR ratio and which program you qualify for. But in general, our programs range from 9.25 here for relatively no cost and up from there with our various investors and banks and programs. And obviously various variations of the prepayment penalty for here, for example, all the way up to around the 10. So great options here to get down. And if you want to buy down the rates, you can on any of these programs. So these are our most popular options for investors. And that will be pretty much it for what we go through. If you guys are interested in any of these programs, obviously we can go more in depth. Please get with one of our licensed loan officers. But for now, I will go ahead and stop screen sharing. And I'll just have Jose explain a little bit about how we use the DSCR programs, specifically for short-term rentals. So we went through a demo last night, Jose, with our team, and talked a little bit about how we can optimize those DSCR programs for short-term rentals. So can you just talk a little bit about that today so people can understand?
Absolutely. Yes, short-term rentals, as we know, is an amazing value-added play. Very popular with the investors for obvious reasons, a great increase in their net operating income. But it is very tricky because not all of the secondary market loan purchasers accept short-term rental income on the 1007, which is the addendum on the appraisal that documents the property's rental income. So there are a lot of twists and turns to being able to navigate the short-term rental income documentation waters. We've been doing it for over 3 years, so I do believe that we've perfected that art. Very tricky because, like, as we saw in the review that we did last night, we had to go deep into the guidelines to make sure that we would be able to capture that short-term rental income, which we did. And in the case of the property that we reviewed last night, the DSCR capturing the short-term rental income was going to be like 1.6 or 1.7, versus if somebody goes the traditional route and uses long-term rent on the 1007, because that's the way they've always done it and the only way they know how to do it, the DSCR on their property would have been like 0.6, and at most would have qualified for a no ratio DSCR at a much lower loan to value, probably 75, as opposed to the 80% LTV that we were able to obtain for this investor because of our knowledge and use of the guidelines, and because of our extensive options that we have for DSCR. This is not something that we just got into now because we were not generating any loans. This is something that we planned, and I think something that we have perfected. So definitely reach out to us for all of your short-term rental properties. And on these DSCR loans, in some cases for one-unit properties, we have LTVs as high as 85%. So keep that in mind. Look to the mortgage calculator for all of your investor needs.
Beautiful. So yeah, tomorrow maybe we'll do the 85 DSCR and talk about that. But Kyle, can you just tell everybody where they can reach out if they're a loan officer that wants to connect or
Yeah,
a
absolutely.
borrower?
Absolutely. Yeah. Thank you, Nick and Jose. So as Jose was saying, absolutely incredible opportunities here for the investor. So anybody out there who is an investor, there's some great opportunities. But I also want to make note that a lot of these programs will allow for first-time investors, right? So even if you're not an investor yet, if you're looking to get into it, understand that we have these programs with no job verification, no income verification. So if you're one of the people who is looking to get into real estate investing in rental properties, or as Jose was saying, Airbnb properties, it's as simple as 20 to 25% down payment, right? And that's literally it. And so if you want to reach out to us, feel free to do so. You can go to themortgagecalculator.com and you can get an instant quick quote there. We have 345 loan officers that can do loans in almost every state. And so feel free to reach out to us. You can email us info@themortgagecalculator.com, or you can go to our website, themortgagecalculator.com. So we have tons of loan officers. And as Jose was saying last night when we went through this demo, this is what our loan officers do, right? So of course, our loan officers can help you with conventional and FHA and VA, all that kind of good stuff. But the mortgage calculator has loan officers who can go much more above and beyond that, way beyond what the average mortgage broker can do to analyze self-employed income, to analyze short-term rental income, to do all these things to where we can get you in all these special programs that we have. So whether you're an experienced investor, a first-time investor, or somebody self-employed just looking to get into a home, we are the ones that can do that for you, and we are here. So themortgagecalculator.com, info@themortgagecalculator.com if you want to reach out with the email. And thank you everyone so much for tuning in, and we will see you tomorrow. We're doing this every morning. I see we had a question there on the chat that asked if we do this every morning. Yes, absolutely we do. So we will see everybody back here tomorrow morning. Everybody have a great day.
Thanks, guys.
Thank you, everyone.